In this video, I'll demonstrate why, despite the initial impression that his projections had already been refuted by the company's poor performance in 2022, well-known YouTuber Kevin's optimistic forecasts for Tesla stock will come to pass. To make its years more accessible to investors, Tesla announced a 3-for-1 stock split in the summer of last year after weeks of publicity surrounding the company's efforts to increase its market value. If you recall, business reports on EVS were alarmists, meant to sound something like this, and investors and analysts set frightening price targets for Tesla in light of the split. One analyst was Kevin, who had known the company for a long time. As we may probably have assumed, Tesla Bull is a professional YouTuber and serial investor who explained why the stock's expected performance following the split was supposed to be absolutely outstanding. Kevin's forecasts have not come to pass. Although the last few months have been a catastrophe for the venerable EVV manufacturer and Tesla shares are down 69% year over year, there is still hope that Kevin's hopeful predictions at the Tesla stock split will come to pass first. If you liked this video, please hit the like button, subscribe, and turn on the alerts so you can stay up to date on the most recent events. Back in the day, analysts like me responded to Tesla's announcement of a 3-for-1 stock split, which we all hoped would restore the stock's market value. Kevin hopes that the stock's performance will improve following the split. According to Kevin, an American financial expert who is passionate about investing, Tesla's proposed 3-for-1 stock click might benefit both the company and investors because businesses typically outperform the S&P 500, an index that tracks 500 publicly traded companies in the U.S. following stock splits. The value of your stock portfolio was untouched by the split, which is a typical reaction when a company's stock price changes. Tesla's stock split was a 3-for-1 split, meaning that you received 3 additional shares for every share you currently owned. When the value of a share of Tesla stock was around $714, it rose to a point where the average investor could no longer afford to purchase it. The split made the stock more accessible to investors, with the price of the stock being around $238 on the split date. According to Tesla, individual investors have expressed a strong desire to purchase the company's shares, indicating that a stock split would have been the most effective strategy to draw in new investors. At the time, Kevin believed that the stock split was beneficial because Tesla's earnings forecasts were more reasonable than those of the majority of tech stocks, such as other Tesla bulls. Despite what we have seen recently in recent months, Kevin saw the stock split as a chance to buy more Tesla shares because, as he stated during the discussion of the split, a rise in the price of Tesla shares will generate more money for the company's shareholders. Additionally, at the time of the split, Kevin shared his reasoning for expecting Tesla's market value to surpass $10 trillion within 10 years at the cyber rodeo when it comes to robots. The firm to purchase and invest in is Tesla. Kevin thinks Tesla will announce the construction of 5 to 10 more gigafactories over the course of the next 2 years, defending these new facilities by claiming that the businesses are copying and pasting. As the firm turns its focus to artificial intelligence, Tesla is placing less emphasis on manufacturing automobiles. To put it mildly, the company's new objectives and ambitions for breaking into the artificial intelligence market are impressive. Kevin thinks that despite the difficulties the company is currently facing, Tesla has supply chain potential because demand for its electric vehicles is steadily rising in China and other nations. So any challenges the company is currently facing might only need to be short-term. According to Kevin, Tesla's robotic humanoid has the ability to revolutionize the company since it resolves the main problem with its endeavor, which is the possibility that humans may eventually be replaced by robots. Tesla's optimist will increase productivity and enable the pursuit of more lucrative commercial opportunities. Learn that Kevin is optimistic about Tesla's future prospects based on his bullish assessment of the company and its stocks. Fortunately, Many stock analysts agree with him. According to TNN Money, following the June stock split announcement, 12 or 45 investment analysts and monitors gave Tesla shares an excellent buy rating with an average price objective of $1,000. 12 analysts have given Tesla a favorable rating and advised purchasing the stock and holding on to it for the long term. There is demand. The company's operations continue to meet that demand, and public opinion continues to trend in favor of electronic vehicles. Therefore, I fail to understand why the company's fundamentals remain flawless despite its recent performance. For some time now, Tesla has been discussing their ideas for robotaxis and Cybertrucks. The public's focus extends beyond Tesla's more recent automobile models. These advancements in the UV sector offer Tesla a potential competitive edge over its the business sold more than 167,572 Model 3s in 2022, ranking among the top automakers in that year. Tesla price target, given the company's rapid expansion and several tactics to boost its market worth, the stock price of Tesla could rise significantly in the future. It's good to hear that Kevin Tweets agrees that the stock market is pricey according to the financial report. So the projection of $3,000 per share after display in 2024 may be a little too optimistic. However, the company hasn't been immune to market problems in recent months, so setting a high price goal for Tesla stock may not be ideal since many factors have prevented the stock from skyrocketing. Let's also take into account the opinions of other analysts. According to Brian Johnson's study, a decline in Shanghai manufacturing from 3,1,5,0,0 to 2,5,1,0,0 might cause Tesla's first quarter production and profitability to fall short of projections. The price objective for Tesla was recently raised to $370 per share by the British multinational bank Barclays, while the target price for RBC Capital and UBS's stocks is $1,100. Production at Tesla's 2 new gigafactories has increased, which is the cause of the enormous order backlog. Higher costs and procedures are the cause of Tesla's improved profits. Innovation in EV companies' enhanced supply chains give them a competitive edge over other EV manufacturers, where Patrick Kummel attributed Tesla's price target to 3 key factors: software development, semiconductor batteries, and growth. According to his most recent tweet, American YouTuber Kevin is confident that Tesla can continue to outperform its competitors for the foreseeable future. He owns more than 50 shares of Tesla, and even if the company's stock price increases following the split, the success of the business as a whole will be the deciding factor. The good news is that this is not the first time Tesla has divided its stock, and on August 31st, 2020, the company announced a 5-for-1 split, which caused the stock price to rise in a comparable range. Although investors welcomed Amazon's recent 24-to-1 stock split, it does not guarantee that Tesla's stock price will rise after the split. As we all know, it hasn't. But it may give us a sense of what might occur 2 or 3 years from now. If you want to avoid losing your entire investment portfolio, it is wise to follow Kevin's advice and spread your investments across a number of different markets. Although it is uncertain whether the stock will increase or decrease over the next 10 to 12 months, it is possible that the split influenced investors' decisions to buy Tesla shares. Do you share Kevin's optimistic outlook for the company, or do you have a slightly different viewpoint? Please share your ideas in the comment section below, and don't forget to hit the like and subscribe buttons. We are grateful that you watched it, and we hope to see you soon.